2023 has been to a pretty great start. Stocks are on a nice rally. A lot of people are optimistic. Inflation is slowly going down. Overall, we're looking good for the future. So there's a lot of stocks that we're going to be picking up, and the first one is going to be, of course, AMD. AMD is doing exceptionally well this year. I did pick up some shares at the $60 each. But we can see it's still down 41% in the past year. So now is a great time to get into this stock right as the semiconductor shortage is fading. So you want to get into these semiconductor stocks such as AMD, Intel. Intel is another great one. It is down quite a bit from its all-time highs, and it also offers a dividend. But for people looking for some pretty good growth, AMD can definitely offer that. And it's sitting at a very nice price point considering the all-time highs was around $150 per share. So it's a very nice pickup. I'm going to continuously adding more shares of AMD to my portfolio. But let's hop right into the next stock, and it's going to be Amazon. Amazon and also Google are going to be our next two stocks. They're very great pickups under $100 per share. This may be the last time that we see these stocks stay this low for quite a while because it is still down 35% in the past year. Very, very good discount. I have a ton of shares of Amazon in my Roth IRA. I have a few shares in my Robinhood portfolio, but if you guys have the opportunity, pick up Amazon shares. It's almost hitting the $100 price point, and $100 price point is a huge price level. It's a very psychological price level. And I do think that once Amazon breaks the $100 price point, we're going to be seeing a nice rally because it is going to offer a nice support for Amazon as well as Google. Google is a great stock as well, pretty much following Amazon, huge tech giants. I know they recently had a ton of layoffs, but for the future going forward, Amazon, Google, these companies are not going away. So this may be the last time you guys are going to see shares of Amazon and Google stay this low. So definitely pick up some shares, cheap price, and always have a 3 to 5 year time horizon. Don't care what it happens in the short term. You want to look for long-term growth, and that's really how you're going to make money in this stock market because it could get a little bumpy early 2023. But overall, I think we're going to be ending up with a green market for the end of very 2023. Fourth stock on our list is going to be Apple. Now, Apple, it's only down 15% in the past year, but Apple is an amazing company. They are actually the only big tech company that has not had massive layoffs. Amazon, Google, Facebook, all of these other companies have had massive layoffs. Apple is taking a different approach. They're very good for shareholders. They also offer a dividend yield 0.66%. While it's not much, it is nice that they are giving a little bit back to investors. But Apple, amazing company, amazing stock. They know how to tailor to investors. As we can see in the past 5 years, amazing chart. Apple is doing exceptionally well, and I know that a lot of people are going to be very happy holding Apple shares for the long term. It's pretty much a buy and hold forever. I have a ton of Apple shares in my Roth IRA, and I have quite a bit of shares in my Robinhood portfolio here. But if you do not want to buy Apple, there is some other options. QQQ. I'm continuously adding shares of T triple Q, or sorry, triple Q, which is down 21% in the past year still. So we do have a lot of ways to go for it to hit that $400 price point. But overall, amazing ETF. And if you don't already know, QQQ is a Nasdaq. It holds the top 100 or so biggest tech companies. So if you don't know which tech company to buy, whether that be Amazon, Google, AMD, you could buy a whole bunch of them just by buying this one ETF. A very, very safe option pick on this list. But if you want a little bit more leverage, a little bit more bigger returns, that's what T triple Q is for. And I'm going to potentially buy some more shares of T triple Q if this ETF does drop a bit, because this is a triple leverage ETF, basically the same as QQQ, but it is triple leverage. So it is going to be a little bit more volatile. But if you have pretty good time horizon, like a year to 3 years, you definitely want to pick up some T triple Q because it can definitely do very good stuff for your portfolio. Now, of course, it is triple leverage, so it is going to be 3 times returns. And as you can see, it is down 66% in the past year. So you do want to be careful. And I do think we're pretty close to the bottom, honestly. Stocks have gotten absolutely killed in 2022. So I do think that picking up some shares on this ETF is going to be pretty good, and especially since look how much it rose. It went from $11 per share all the way to about $90 per share for the huge tech rally during the 2021. But yeah, if we see another huge tech rally, it can definitely hit highs of $80 per share again if we see an insane market rally. So that's about it for this video. Remember, stocks are at an all-time low right now. And we want to take advantage of that because when people are selling, you want to pick up shares of your favorite companies at a discount. Don't get scared. If you have a long time horizon, you want to pick up shares at a discount because you don't really care what happens in the short term. If you know it's a solid company, if it's a good discounted stock at a good price point, pick up some shares and continually invest. That's the main thing. You don't want to put all your money into a stock at once. You want to spread it out over a few months or years, so you make sure you get that dollar cost averaging and you have a good cost basis.